Good evening, everyone. Hope you're doing good. Welcome to Vikram's Money Mantra. Today, we'll discuss about taxation rules in the past, taxation rules at present, and what could happen in future also. So, these are the taxation changes which has happened in last 5 years. If you see in 2018 budget, long-term capital gains tax was reintroduced. When I say reintroduced, in 2004, the long-term capital gains tax was abolished. Till 2004, the long-term capital gains tax was there. It was abolished to give a momentum to the stock market. So in 2018, the stock market was good, and Arun Jaitley ji reintroduced it in 2018. So this was the first taxation changes in last 5 years. So major changes I can say. The second thing is employers' contribution exceeding 7.5 lakh rupees in a year towards NPS, superannuation fund, and employee provident fund. It will be taxable in the hands of employee. What employee used to do? Let us say if I am working for a MNC, if my income is 50 lakh rupees, I used to tell my employer deduct 25 lakh rupees and invest in superannuation, invest in NPS, invest in EPF, and my taxation tax slab would come down, and I would save tax on the 25 lakh rupees income. So this was abolished in 2020. That is, a new tax rule was introduced where it said up to 7.5 lakh rupees in a year you can invest into NPS, superannuation, and EPF, and below 7.5 lakh rupees it is non-taxable. Above 7.5 lakh rupees it will become taxable. The third thing which happened in 2020, dividends from stocks and mutual fund to be taxed as regular income. Earlier, the companies used to pay tax on behalf of the customer, but from the dividend used to be tax free. But now, dividends and stocks and mutual funds to be taxed as a regular income, meaning it is not 10% or 12%. It is as regular income, meaning whatever is your salary. If you got a 5 lakh rupees dividend and if your salary is 25 lakhs, this 5 lakh rupees will be added to the dividend and will be taxed accordingly. So the three major changes, once again we'll see first three changes. In 2018 budget, long-term capital gains or tax was reintroduced. So it was kept at 10%. Today, if you see, it is around 12.5% long-term capital gains tax. The second rule was in 2020 budget, more than 7.5 lakh rupees if the employee deposits in employees NPS, superannuation, and EPF, the returns will become taxable. The third rule was in 2020, whatever dividend you get from stock market or mutual fund, that will be treated as a regular income, not at the long-term capital gains tax. It will be treated as regular income and you'll be taxed accordingly. And in 2021, one more rule came, unit link plan. Unit link plan of life insurance companies, even if you invest 10 lakhs, 20 lakh rupees per annum, it used to be treated as tax free. But from 2021, maximum up to 2.5 lakh rupees, the investment what you do, if whatever returns you get, it is tax free. About 2.5 lakh rupees, even this money got taxed. The rule was introduced where the ULIP above 2.5 lakh rupees per annum, that also will become taxable. In the same year 2021, taxation on investment above 2.5 lakh rupees, employee contribution in EPF was introduced. So if employer contributes 10%, employee contributes 10%. If it is more than 2.5 lakh rupees, the employee contribution, the amount whatever you receive, the money what you receive, it will be taxable. This rule was also implemented in 2021. In 2023, one more rule was introduced, taxation on more than 5 lakh rupees investment in insurance plans. It was introduced in 2023. Any new plan you take it after April 2023, the returns from that will be taxable. But below 5 lakh rupees, whatever investment you do, the returns is completely tax free. So you have an opportunity now that if your insurance premium is not more than 5 lakh rupees, you get it to 5 lakh rupees because the returns over there, it is tax free. It is now. Next budget, next budget, next budget, if it is reduced, then from that time the whatever returns you get, that could be taxed from the first rupee also. But today you have an opportunity up to 5 lakh rupees of investment in insurance plan. The returns whatever you get, it is completely tax free under section 1010D. So the same year one more rule came in 2023. Taxation on debt mutual fund was changed. Earlier, the taxation, let us say, if you invest 10 lakh rupees, if you invest 10 lakh rupees, if the return is 10 more lakhs, and your return is total 20 lakhs, the 10 lakh rupees what you have made extra, you have to pay tax as long term, sorry, indexation on indexation. So today it is not under indexation, it is added to the income directly. So this rule was also changed in 2023. So I'll repeat what are all the changes which happened last. That is in 2018 budget, long-term capital gains was reintroduced. It was there earlier till 2004 to give momentum. It was abolished, but again it is reintroduced. Employers' contribution more than 7.5 lakh rupees in a year towards NPS, superannuation, and EPF will be taxed at the hands of employee. 2020 dividends from stock market and mutual funds also to be added as income, not indexation, no capital gains tax. It is added directly to the income. 2021 ULIP taxation above 2.5 lakh rupees investment was introduced. In 2021, taxation on investment above 2.5 lakh rupees, employee contribution into EPF was also introduced. So EPF, PF, if EPF, if the person invests more than 2.5 lakh rupees, the returns what he gets will be taxable. In 2023, taxation on more than 5 lakh rupees investment in insurance plans was introduced. Today, there's a gray area that is up to 5 lakh rupees. If you invest now, the returns will be completely tax free throughout the lifetime. And again, in 2023, taxation on debt mutual fund was changed. Changed meaning earlier it was according to indexation, but now there is no indexation. Whatever returns you get from debt mutual fund, it will be added to the income. Earlier, to avoid this tax, people instead of investing in FD, they used to invest in debt mutual fund. But today, in 2023 onwards, it is added to the income. Whatever gains you make, it will be added to the income. So these are all the changes which has happened in the past. What could happen in future? Possible taxation assumptions in the coming years. See, what I foresee is all the products. Today, mutual fund, the taxation rate is 12.5%. 25% the taxation has gone higher for long-term capital gains. For short-term capital gains, it was 15%. Now it is 20%. So uh, for other products, it is 30%. For some products, there is indexation. There is a lot of confusion. So what will happen in future, according to me, is there will be a uniform taxation. From the very first rupee you make, you will have to pay 30% tax. According to me, approximately, I'm telling around 30% tax. This uniformity in taxation will come in India also. This is already there. Taxation rule is already there in developed countries where there is a uniform taxation rule. But in India also, it will surely come. There will be a uniform taxation. This is going to come in future. And there is another thing which is called inheritance tax. In Parliament, it was debated that the government will not bring inheritance tax. But I am sure if this government or the other government, this inheritance tax will surely come to India, but we don't know when. But when it comes, it may come because India is into financial deficit. So 80% of GDP is under loan. So to come out of this, we need more and more inflow for the country to develop or to give financial security to the elders, that is senior citizens. Government needs a lot of money. So money, where it will come? It will come only through taxes. So inheritance tax will come, may come very soon. So why I tell you this? Because if you see, when I did Wikipedia on inheritance tax, all these countries list came out. Belgium, if you see, 80% is the inheritance tax. Up to 80%. There's a maximum limit, 80%. Japan, the inheritance tax is 55%. South Korea, it is 50%. If you see UK, 40%. In UK, many people take loan to pay inheritance tax. What is this inheritance tax? I have bought a property. I given it for rent or I'm staying. And after me, I want this property to go to my kids. But my kids, when they take this property or inherit this property, they will have to pay some tax to government. That is inheritance tax. That is already there in many developed countries. When I did Wikipedia, other two names came out. It was India and China. There it showed the inheritance tax is 0%. But Wikipedia also knows that inheritance tax will come in India and China also. That is why it has come in the list. So inheritance tax is unavoidable. It will surely come one or the other day. So what will happen? What we should do? Why do we buy this investment plans or assets? Why do we buy? We buy because at the time of earning, we want to invest, we want to secure, we want to save, and then at the time of retirement, we want to liquidate this or we want a regular income. Our main thing is two major financial requirements at the time of retirement. Number one is regular income should come every year to take care of retirement expenses. This is the first thing. Second thing, after me, my investment, whatever I have done, it should go to the nominee. And when I'm earning, I'm paying taxes. Even after retiring, I should pay taxes because all the pension, all the income, what I get, maybe FD income or rental income, it is taxable. But my wish is whatever I get after retirement, that should be tax free. Second thing, whatever it goes to my next generation, that also should be tax free. That is my intention. So our intention is we want tax free income should be generated both for both requirements. That is when I'm retired and after retirement, after me, the when the nominee gets the money, even that money it should be tax free. That is our intentions. So the current taxation law, we have a plan. Today, if you see any asset, let us say mutual fund or real estate, everything is taxable. But we have one product wherein the pension or the retirement amount that is also tax free, and the lump sum money what the nominee gets that is also tax free. So, as I told you, in life insurance, up to 5 lakh rupees premium, the returns will be tax free, and the death claim is also tax free. Death claim, if I have to tell you, death claim don't treat it as a death claim. It is like an asset you have created to the next generation. Why we buy the flat? It is not that we at the time of retirement itself will eat and sell the property. No, we will eat or we will enjoy the property till we are there, and after that we anyways leave the property to the next generation. The same way, this is also an asset. This asset, you are getting income every year, and after us this asset is going to the next generation. Don't treat it as a death benefit. It is a asset going to the next generation. So here you have a option that up to 5 lakh rupees the premium whatever you pay, the returns are completely tax free, and the death claim is also tax free. Even if the premium is more than 5 lakh rupees, the returns, what you get, that is income, it could be treated as an income for you. But the death claim, it is completely tax free. So the plan name is Jivan Umang. In Jivan Umang, it works as P2 concept. In P2 concept, pension will come to the person till the customer survives. And after that, the property will go to the next generation after we are no more. So it is P2 concept. Pension we get till the person is there. That is tax free if the premium is below 5 lakh rupees. And then a big property will go to the next generation. So how this plan works, that I'll tell you. Option one, let us say you have investment everywhere, but this investment also one you should keep it, because if you say uh, 10,000 rupees if you invest per annum for 15 years, you will get 1,20,000 rupees tax-free pension for your lifetime. So 10,000 rupees every month you pay for 15 years, and after 15th year, from the 16th year, you start getting 1,20,000 rupees every year for lifetime. So this is the pension what you get. Let us say if a person If a person at the age of 40 he has taken the plan, till 55 he pays, from 55 till 60 years he has taken the pension, and something happens to him at the age of 60, the nominee will get 32 lakhs. The same thing, let us say 40 years person has taken pension till 55, something happens to him at 70, the nominee will get 42 lakh rupees. Even the pension what he is getting, that is tax free, even the lump sum what the nominee gets, that is also tax free. That is a benefit of this plan. And let us say if a person takes this plan at 40, he lives till 80 years, till 40, till 25 years he'll get the pension of 1,20,000 rupees every year, and whatever property generated, that is 57 lakhs, that also will go to the nominee. This is the beauty of this plan, wherein pension is also tax free, the lump sum is also tax free. There is no point of taxation after retirement, and there is no inheritance tax also in this plan. So the option two is, if you pay the same amount for 20 years, instead of getting 10,000 rupees every month, you will get 15,000 rupees every month from the 20th year. So the property value also, let us say a 35-year-old takes this till 55, and at the 55, he will get 1,80,000 rupees every year till let us say at the age of 55 something happens to him, 47 lakh rupees will go to the nominee. At the age of 65 something happens to the person will get 59 lakh rupees. At the age of 75 something happens to the nominee will get 80 lakh rupees. And if 80 something happens, the nominee will get approximately 1 crore rupees. This is second option, wherein 10,000 rupees per month you pay for 20 years, and you get 1,80,000 rupees every year after 20 years, plus the property to the next generation. Let us say you want to pay a bigger amount, even that is allowed. Let us say 8 lakh rupees you pay for 15 years. After 15 years, you get 8 lakh rupees every year from the 16th year. And if something happens to the person after 50 years, that is 30 years is the person's age, and till 80 years taken pension, that is from 45 to 80, 1 lakh, 8 lakh rupees per annum. Even at the of 80, something happens, the nominee will get 5.4 cr. This 5.4 cr will be completely tax free money. And the 8 lakh rupees, this will be subjected to tax. First 5 lakh rupees, it is not taxable. And after 5 lakh rupees, whatever 3 lakh rupees you extra you get, that will be taxable. If you come under 20% tax bracket, you will have to pay around 60,000 rupees per annum tax. Even that is good. You are losing 0.2 0.3% in taxation, but still the lump sum what you get, it is completely tax free. So these are the this is what I wanted to communicate with you, what has happened in the past, the taxation rules, and what is at present, and what is going to come in the future. The uniform tax is going to come, and the inheritance tax is also going to come in future. So if you want to avoid these things, one property you should have, that is geonymon property. Start investing today. If you want any details, please call me. Thank you.